Hello and welcome everyone to the weekly Delphian meeting. So today's agenda, we'll be going through a market update, and then Shawn has returned from vacation. So I'm going to give him the floor to talk about some earnings trades that are so far that he's tracking for this quarter. I think he has a couple examples he's going to go through. And I think that's all that we have on the agenda. Obviously, feel free to ask questions throughout. Unmute yourself. Please, add in comments as you see fit, and we'll get started. We're gonna have a shook on. I think it's in 2 weeks. Is that right, Joe? The 20.
It is, Josh.
Okay.
Is it the? Yeah, it is.
26th.
I think the last Wednesday of the month.
Yeah. So he hadn't been on a while. We're break him away from all this other stuff to come talk to you guys. So I don't know if we have an agenda about what he wants to discuss. Do we, Joe?
Nothing yet, but I'm sure he will. Create something for all of us. But no agenda, no specific agenda yet.
Yeah. Okay. All right. Well, let's get started. So overall for the market, excuse me. It was funny. SPX just went to 3, but Joe brought it up the other day. We were talking. We had SPX in state 1 and Russell in state 8 at the same time. So I don't know how many times that's happened. Probably maybe once before. Be hard to say. Maybe twice. But
it's also unusual for it to go from 1 to 3, isn't it?
Mm-hmm. Yeah, it usually does 2. But
right.
I mean, the modeling, it can go from any one to any other one. It can go 1 to 8, but it typically will go to, to 2 after 1.
Yeah.
Yeah, it's definitely unusual. Well, the last time it was in 3, it did well. So, hard to say. It's kind of weird, my opinion. But so we got everything else in 8s. The pie obviously shrunk a bunch. We had some pretty big moves down. The levels we talked about were, for resistance, were pretty right on. That 4,600 for SPX, failed there, and Russell failed pretty hard on that 2,100. So we'll go through those charts, and then I think we were even last week about so big swings in the market. We're kind of right in the middle of the range now that we've been. So let's see. First up, let's do state 1, state 8. So that one. Yeah. So that one last week, we were looking at it here on Tuesday where it looked like it's, I think it had just crossed above. So obviously this took off from there. The ones haven't dropped significantly, like a huge drop, kind of like this, kind of like a little dwell there. But, obviously reflected the move pretty strongly there. As far as new lows, we had a little bit of spikes, but nothing like really big, up in 1,000 range. But you can see those new highs are, let me just take them off. We're not really getting much in the way of new highs. Those are kind of flatlining. So, and we're kind of getting, you can see that back basically from, here, the beginning of the year, the new highs pretty much flatlined. We talk about flat lines all the time, and we had all the spikes in the lows. So it's still kind of flatlining. Previously it was reverse, whereas, a bunch of spikes in the highs and pretty much flatlining for the most part in the lows with a few here's and there's. But it seemed like, I guess right here, November, it's kind of where it crossed over and the new lows have taken control. So, we'd like to see, bullish wise, what we'd like to see is get back into this kind of pattern where we got a nice flat line on the lows and we're starting to get some spike ups in the highs. Even when we have those big moves, we're really not getting a lot of highs, new highs. So, this is kind of what we're looking for. It just seems like, since about here, it's been what I pretty much would be right. That's the 16th, so we made new highs barely here, and then it's been pretty bearish with some good rallies, down, pull back from the downward move, new lows. We'll have to see if we make new lows on this one, because we've been making new lows here on, as you can see throughout these. Let us pull it out. We're so from here we made new low, new low, new low. I think, whatever, same low. So what to see if this one we did get a little higher than the previous peak. So what to see if we can not make new lows here. That's what I'd kind of look at for those. Bullish, bearish. So we had a crossover on Friday. You can see, you can get quite a bit of crosses previously in the past. We're kind of finding direction and go back and forth quite a bit. Seems like, that's kind of what we're doing, is a range bound type of trade here. It seems, as we'll look at the charts, we're pretty much in the middle of the range. So it's hard to, see much out of that. So can't really surmise anything out of that. You can see last time we got into state one, we had a nice pop up. We had that, state three, and we went to state one and it just turned south. So we'll have to see how we do in this state three. I think we're off to a good start today. Yeah, we're up today a little bit. So it's hard to say, you don't get much out of these moves, so I'm not going to analyze it too much. We'll go into the charts here. So you can see we crossed below that 200. That's the top one. And even below the 50. So I think the 50's at 44.24. And I think we're kind of a little above that right now. So those are kind of key things to watch, see if these turn into strong resistance. Last time they blew through them. So you'll have to see if this time, if you can maintain those. I was surprised yesterday, it had a big rally after that huge inflation number, and then it ended up down. So, the market's just, it's crazy. The reaction sometimes to things. So I'd watch those two levels, really. That's what I'd be going off of. And then, we have our big levels. Let's see if I can draw a line on here. So our 46. So that's what we were talking about for a while there. And then the other one's 41. So that's our ranges, key areas as far as, SPX, that's what, I'm kind of thinking range bound. We're kind of a little above the halfway mark of that range, but if they, watch those SMAs for that one. I did a quick miniature Fibonacci here. We've done the long ones. I didn't really pull it out. We pretty much, hit that 50 retracement, didn't close there on that, on this little kind of short-term move over the past month. So that rally, we pulled about halfway back. So, that can always be and shows the expert on that, but that could be a point where things, turn upwards. But, I think the keys are 40, we're still the same ranges. I think I said 4,200 actually, yeah. 46 and 42, so we're pretty much right in the middle. Right? I was looking at my notes here. 46, 4,200. So if we can get below, maintain below 4,200, obviously bearish. And the 4,600, if we could stay above there, I think that's a bullish run. Until then, it's kind of like our Russell that we watched for about a year in that range. So just kind of, I think that's the key there for the ranges there. Let's look at Russell, went into 8, started down a little bit. I think it's kind of entry is 1944, so we're 20 points above that right now. It's been acting a little stronger on these moves than, for some reason, than SPX. I just think it's been, so beaten down. But, on average, we don't always talk about average. On average, it will come down here, retest, get somewhere in here, and then usually pull up after that. So didn't really swoop down. It'd be tough. This is kind of a very key level for the Russell, 1900. If it can get below there and hold, obviously it's gonna be pretty bearish for the Russell. But it's not really following typical pattern yet. We're kind of about right here. So still take a few days to see which way this thing's going. But obviously that key level's at 1900, and then on the upside is 2100. So those are your two key levels, and I'll pull them up on the chart here. Wish these would be a little thicker, kind of light. So 21. And this one's clear as day, 19. And that's based off of those long-term Fibonacci type things that we were looking at. So that's the lower band. The upper band that we were watching before for quite a long time was 21 to, and I think it was like 23, and 2350. So it had that false breakout, just like here, we had a false breakout, came back in. So right in the middle of the range, same thing as SPX. Key levels 2100 and 9 to the upside and 19 to the downside. You can see one thing I kind of want to point out is, you can watch this 50-day here too, because the 50 days right now, 2030, I think we're a little below that. See if this is providing resistance. You can see we haven't even gotten near the top 200 at all. Whereas like SPX, it kind of tried 200. That's 50. Sorry, it's blown through the 200 and retested quite a bit. This hadn't got near the 200 since the beginning of the year. So I think it'll start getting interesting, when that 200-day SMA gets around 2100. I think that'll be something interesting to watch. But your key levels 2100, and I'd watch that 2030 on the 50-day. Seems like it's providing, you can see here, a little bit of resistance, broke through, see if it provides resistance again. If these things start turning into strong resistance, then, that's kind of bearish overall for the market. If they can't get above these moving averages. Fed minutes. So we're under a month away, to May 4th. Let me move this thing up. So you can see we're at pretty much almost certain to get a 50-point rate hike. A month ago it was less than 50-50. And if we go another month, most certainly. So they're kind of starting to price in, 2 rate hikes, 50 basis points each. That's kind of the expectation right now. And I think some of the, I think they're going to be putting out policy on exactly what they're doing as far as the balance sheet. I think they've done some messaging to test the market. But I think the next meeting, they're going to put out their official policy. That's, I think, what we should expect for that. Just of a note too, the 10 years has kind of gone crazy, down a little today. But if you just look year to date, in the last month, pretty much is 175. We made, I mean, that's a huge move. If you look long term, 18, that's we were raising rates back then. You can see that tipping point was 315. That's basically you can see right after they started dropping the rates, went all the way down. But yeah, we're on the same cycle now. We're gonna also be shedding assets here in the near term. I'm not sure if they actually stopped buying. I think they had said they would, but I don't know if they've stopped or not. So we'll have to check on that. But this is something to watch. We talked about these rates, right? The debt is going to drive the market, and once it gets to a tipping point, then it's real ugly for pretty much everything. So if they're obviously, they're way behind on the inflation curve. If we're getting readings of 8.5 or over 7 consistently month over month, I mean, they're way behind. So we called it not transitory as soon as they said transitory. I knew that that was a load of BS. So I think the key is what's Fed and the balance sheet and the rates. I think the debt market's going to drive how the equities do. So okay, I think that's it. We got the key levels. Yeah, I think that's it. Any questions or comments on that? Dissenting views? All right, all quiet on the Western Front here. Okay, I'll let Shawn go then, since we have no comments. All right, you ready, Shawn?
Yeah, I'm ready. I'm here.
All right.
All right, I'll share my screen. So yeah, I'm back, everybody. I heard last week was a good week, so I kind of want to follow up with some of the earnings trades of what we have, in the virtual portfolio, and what we're looking at with earnings, and even got a little update, on a brief update kind of on the market and how it compares to the earnings. So let me share my screen. All right. right, so you should be able to see my virtual portfolios. So just like last quarter and moving forward, I'm going to keep separate tabs for our earnings trades, for our estimates, and for our confirmed trades. So you can see here at the very top, I have the Q1 2022 earnings, the bullish pre-runners, I have estimated, and I have a confirmed. So if you look, you can see between the two, we have a total of 22 trades, 22 open positions. There is one position that has been closed for profit within the confirmed, but I will show you that. So really, there's a total of 23 that have come out. Now, this is as of the close of yesterday, so that doesn't include the positions that had come out this morning. So those trades would not be included in this mix because, again, when I'm running the the virtual portfolios, we're running off the end of day data. So I try to enter the trades in tomorrow morning using today's prices just to basically keep the tracking date or the entry date within the virtual portfolio exactly how it should be if you place the trades live. So I can always make those trade date adjustments in the virtual portfolio, but I found it easier just to do it the way I've been doing it. So that's why we're not seeing those couple of trades from this morning in there as of yet. So if we look at the two trades, the two virtual portfolios, I started the sets with 100,000. I've kind of been mixing around. Before I started them with 50 and 30 and 100 before. So I'm doing them with 100 just because it seems like we're, some of the trades were pushing in there and getting a little close to using up all the capital. So I just wanted to make sure and give myself some room. So anytime I'm talking about percentages or returns, I want to make sure we're looking at it based on 100,000. And if we want to, base it off of 50,000, we can obviously adjust the percentages to make sure it's reflecting, that starting capital. And that's what I want to do here. So if I pull up the confirmed trades, which are these CO in there, and I have them listed in the descriptor as confirmed, we can see as of the close of yesterday, as of the close of last night, based off of $100,000 starting portfolio, the portfolio is down 1.13%. So we are down money in this portfolio, but we can obviously see that based on the movement that we've had, in the markets as a whole since the portfolio started. What I did was I looked at the first day that I entered in a trade in this virtual portfolio. If I scroll down, we can see that on the 30th, I entered in the AXP trade, American Express. So what I did was I ran analysis based on, where was the market at on the 30th and where was it at as of the close of yesterday, and what type of percentage up or percentage down is the market at this particular time. So I want to show you a chart for the SPY. Now this is the SPY, the ETF, so this is not the actual SPX. So it is the SPY, but I put some little markers here to show, here's the date. Excuse me, so here's the date of the 30th. So you can see on the 30th, the market closed at 458.79, which goes over here. And then we can see as of the close of yesterday, that candle should be red there. I don't know why it changes when I do that. But as of the close of yesterday, the market was down. It closed at 438.12. So I calculated the difference between the two, and that's about a 4.4 or 4.44% difference to the downside. So the market's dropped about 4.5% roughly, over that time frame since we started the bullish pre-runners or the earnings plan for the Q1 2022. And then we can also see a similar drop in the NASDAQ. So this is the QQQ, again, the ETF, but if you look here, this is the 30th of March. We can see that the market closed at the ETF, closed at 367.09. And then as of yesterday, we had a close of 339.45. And that's roughly a drop of 7.5%. So, relatively looking at our, earnings, our bullish pre-runner trades dropping, roughly 1.13, and then looking at 4% and change for the SPY and then 7.5 for the QQQ, the trades have definitely dropped in the virtual portfolio, but not as substantial as the market has or these ETF have. And I know the ETFs are comprised of a bunch of different symbols, and we're only looking at a handful of trades within the virtual portfolio. But I think, in my mind, it brought some pretty great perspective of the fact that, yeah, the market's down, but the actual, bullish pre-runners aren't down as much as you might expect when you're comparing the two. One thing that I did too when I started comparing them was I said, well, typically, if I only have 11 trades in my account, I'm probably not going to be utilizing a $100,000 portfolio. So let's just take it relative and drop the portfolio in half and say I started with a starting capital of 50,000. So in comparison though, if I drop my starting capital to 50,000, I need to increase my return because I'm, using a different percentage based on a certain account size. So now my percentage would actually be down, I'd be down on these trades 2.26%. So, still 2.26 versus 4.4 or 7.5 is a decent difference. And I'm still in, a lot of my trades. I still have a decent amount of time for these trades to, to come to fruition. Looking at these confirmed trades, though, we can see a couple of the bigger losers are down below, which are your American Express, down a substantial amount, almost 76%. Intel down, almost 70%. And those are the trades that earnings are coming up pretty soon for those trades. I think American Express has on the 22nd, maybe I'm just pulling it up on another screen real quick. Give me 1 second. So American Express has earnings coming out on the 22nd before the market opens. So, if we're looking at today's date as the 13th, I'd have to be out of this trade on the 21st if I don't hit my profit target, prior to that happening. And then Intel, I think their earnings is pretty close to the same time, maybe the 28th, if I'm right. Intel is the 28th after the market closes. So they're on the next Thursday and have to be out of that Intel trade by then. Some of these other trades might be coming about sooner. I didn't really look those up, but I wanted to look these two up because those are some of the biggest losers in the portfolio as of right now. But, I think just the way we've been looking at different things, using that portfolio size, using our risk, and I wanted to make a note of that too, that we are trying to keep that risk parameters, around $1,000. I want to make sure I'm risking at least $1,000 on each trade and just keeping that pretty consistent throughout the time of this virtual portfolio. So nothing really huge here that stands out. I mean, obviously these trades being some pretty substantial losers. I think today's market movement is going to help a lot of these trades out. I don't think it's going to help, obviously, those two come back to life and make some money, but any reprieve back to the upside will be a positive for some of these positions. And I think even some of these are going to make some pretty big moves, by the close today. So, and if you look at it overall, we have 11 trades currently, 11 open positions currently, and there's 4 are profitable positions as of right now, and that means 7 are actually, losing positions. And we can see some of them aren't super substantial. I mean, you're looking at this HUN, and then you can see the Intel and the MX. Those are the bigger ones out of the group. There was one position in the open positions that was closed, that there is one position that was closed, and that's this ABC. We can see that the position was put on 4-4, and pretty quickly it made enough of a move, over a short period of time to be able to get out for a decent profit, around a 38 or 39% profit based on the credit that we received. So, so there was one position that we were able to close for a profit. Any comments or questions on, the comparison between the virtual portfolio and the market, the percentages or anything like that? This is something I was looking at, and I was just trying to make sure that I'm comparing apples to apples when looking at these things, because, I want to make sure I'm giving, the right signals, if you will, on how I'm comparing them. And like I said before, this is where I think this group is huge, because we can all, talk different ideas and say, well, that's not the way I would look at it, and kind of give input on how you would look at it. So any comments or questions? All right.
Yeah,
Fair enough.
interestingly
So,
enough, I took the ABC trade. It never closed for me.
it didn't close. Are the days the same? The 4-4, is the 4-4 entry the same?
Yeah.
I'll have to look at that one and see, because
Of course, I took it during live market hours, and this is going to enter at the end of the day, right?
Well, no, I try to replicate the entry. So whenever the snippet, not the snippet, I'm sorry, that's what I'm looking at. Whenever the trade comes out, I'm just pulling it up on a different screen just to show you. So I basically take a snapshot of the pre-alerts as they come out, and I enter them in the same way that we have here as the pre-alert. So now, if you don't get filled at this exact price, plus or minus a little bit, that might skew it. But these are the entry prices that I put in, the 815 and the 355. Right. So but I mean, you shouldn't get too far off. So I think you're working a limit similar to the mid prices, right?
What's that?
Are you working your entry price at these mid prices? So if the difference between
Yes, yeah, but I think,
yeah.
now I see a mistake I might have made. I think I did the Junes and you have showing that the August.
The August, yeah, some of those are coming up like that. I don't know. Let me pull up ABC on a different screen as well.
Yeah, I might have clicked on the wrong series.
Because I see May's, but I don't see any June or July's. It goes from May and then it goes to August. Now there might have been some May weeklies that might have been like within the 60 or past the 60 days, but I think the May 20th wouldn't have been passed. I'd have to look at it and see. Because as of today, they're showing me the May 20s as of today having 37 days on them. And we did this trade at the beginning we did this trade, maybe only a week and a half ago or so.
I'll go back and check.
So maybe,
I think I may have done the June 23, just clicking in the wrong place.
Oh, okay. Yeah, because some of those, I think even after this trade should have still been above 25%, of the credit received, or at least close to it. Because I think a couple days after, I had seen it running around like 29 and 40. I don't know if it went all the way up to 40%, but it kind of scooted around a bit. So let me know if you don't mind, please, because I obviously want to make sure.
Well, it's sitting at a profit. I think you did it right. I think what happened is I just clicked on the wrong series, and it's sitting at a profit right now, but not much of a profit because the series I accidentally picked in error was so far out. So
maybe right. Maybe it's not moving.
But on the other hand, I did have the Hilton trade close for profit this morning.
Oh, nice. What's the symbol of Hilton? What is that symbol?
HLT.
Oh, HLT. Okay.
It would be open on yours because it just closed today. It'll close for you.
Oh, right. Okay, fair enough. Yeah, I was like, hold on, let me make sure I got that one. Because there's a couple that are pretty close that have been scooting around, but again, they haven't really. Oh, here you go. Yeah, HLT. So it shows it actually down a little bit, and then like you say, it's up 6% today, or 6%. So that should be a pretty good move. Okay, good deal. Well, cool.
Yeah, it hit the profit target already today.
Perfect. Well, good deal. Yeah, and too, I mean, some of these, like that ABC trade as well. If it's reflecting 39% here, and you use the same series I did, I mean, you would probably be out at 25% because I'm using the end of day and you're using intraday, which is going to adjust the losers, I think, sometimes to the one side, and adjust the winners to the one side as well. I think we've talked about it before. It seems to help wash it out in the end, but it is a bit of a difference that would be noticeable. So. Okay, perfect. So I mean, there's a couple in here. Like I said, I think it just gives a really good. It just gave a really interesting perspective to me because when I saw this earlier, I said, "Oh man, this is down," and I said, "Well, the market is down, but how much down is it in comparison to the market?" And then finding out that the market was down, 4.4 and then 7.5, and finding out that this is only down maybe half of that 4.4. When you use the $50,000, that kind of brings it into perspective. That's like, wow, okay, well, it's not doing as bad as you might think. Like it actually is kind of running pretty fair when you're talking about the period of we are in right now with the market. And then using some of that information into some of those trades, I think like Sudhir talked about over the past couple of weeks, using those those long, I think, what is it, those long put spreads. What are those spreads called? Sit here, I'm sorry. I'm forgetting for a second.
Oh, butterflies.
The long put butterfly, those trades like that, and right now you're getting this downturn in the market. So those trades, I haven't been tracking them. I was out of the office last week, but I haven't been tracking them as much. But I mean, those I would think would be working out pretty decently, these days that we've been having in the market with the market selling off. So those are just another subset to use in there to hedge, to help kind of keep the account steady or even moving up in this market pullback. So I wanted to share that with you guys. Like I said, I found it to be pretty interesting. And this quarter, what we're doing is making a really goal of keeping track of these positions, not only on a weekly basis, but on a daily basis. So every day when, I have the ability to put these trades in and to track them, I'm going to track them that way. And then hopefully we'll be able to talk about them every Wednesday and just give a brief update of here's where the portfolio is, the virtual portfolio estimated versus confirmed, and keep this going throughout the quarter. Obviously, once, more trade types come out from the vol rise to the, non-movers to the vol crush, we'll have more portfolios to look at, but I can give a brief summation of where things are at, and we can discuss them, in further details. If we see, one maybe is doing a little bit better than the other, or one's doing a little bit worse, we can dig deeper into the ones that we want to talk about. So yeah, that's pretty much all I had, regarding the virtual portfolio. Any additional comments or questions on, the virtual portfolio, the earnings, or even, the markets in general?
Shawn, Dan here.
Yeah, Dan.
When the earnings trades come out, what I've noticed is as the market's dropping, it's bringing whatever equity, whatever earnings trade is coming out. It seems like it's dragging that down. So I end up watching it, and sometimes I'll even watch it into the next day, and I end up getting a better fill. Because it's getting more down towards support, are doing a turnaround, so
Sure.
I end up getting a little bit gun shy, when I see the overall market taking these big hits,
Right.
and I'm trying to get into some of these trades, and then they're making a pretty big moves, sizable moves,
Yeah, and I think that's fair, right? I think I can't talk for everybody on the call, but I feel that everybody has a similar type of hesitancy, if you will, especially when you see the market making those moves. I mean, I know I do. I try to say, well, maybe I just don't want to get in this one because the market seems like it's pulling down today, and possibly, if you find it's working for you to not execute the position in the morning and kind of see what the market's doing, and if you can get a better fill, I think that's totally fair. The trades that we've pushed out are really, based off of back testing, based off of us running that earnings screener analysis and putting those trades out there based on the most optimal time for entry, based on, the historical results that we have access to. So that doesn't mean that, tomorrow's move is going to be the exact perfect move for the trade entry if it's telling you to get into the trade on that day. So, I think if that approach that you're using seems to suit you better, I mean, I would say definitely use it, right? I mean, I try not to make too many personal judgments when I'm getting into some of these trades that are based off the back testing, but it's really difficult not to, being able to just solely be like a robot and put those trades on is hard. But I think if you find something that's working, and because the environment of the market's a little bit different, I don't think that's a bad thing.
Yeah. Okay. Good.
And we've talked about it. I feel that there's so many trades between our earnings plan and with the studies that you have, so many trades that you can look at and be able to put in your portfolio. So I think if we have 300 trades, let's say, between the two, you're definitely going to find some in there that you're comfortable with and that you're going to be able to trade. And, if you miss one or two, I don't think that's going to be the end of the world, right? You know, and I think I've mentioned this maybe to Joe or Josh, or maybe even part of the group. You know, when I traded before commodities, I had one floor trader that said, you know, he didn't really like to do, you know, tons and tons of trades because he was almost spreading his money out. He was of the mindset that he would wait and he would find trades that he was really confident in, you know, I guess as confident as you can be in a trade. And he would find trades that he was really confident in, and he would invest in those particular trades. And if he found other trades that he liked, but he wasn't as confident in them, he wouldn't do them. And I think that's a really interesting approach. Now, you know, I don't believe in the mindset of putting all my eggs in one basket. I mean, I hate using that analogy, but it's perfect, right? I don't think like, hey, I see this Intel trade and I think it's going to be great, so I'm putting my whole $50,000 in this trade and just letting this thing go gangbusters. I don't think that's the right approach either, even though he almost made it sound like that's what he would do if he was confident in that trade. Because as we all know, that one trade goes bad, something happens, you know, overseas with Intel that causes a problem. Next thing you know, you don't really have an account to trade with. And even if you do have an account, you're definitely going to be nervous putting that next trade on. There's no doubt about it. But I just thought that approach was interesting to be like, you know, you have 4 or 5 trades that came out this morning, you know, try to find one in that group that you're really comfortable, that you're really confident in, and then just trade the one. I mean, you might be wrong, or we might be wrong based on our back testing, but I just feel that having that confidence is pretty huge. And it made sense when he said that. It kind of resonated a bit. So.
Yeah, well put. Thank you.
But yeah, it's always weird when I say that, because it almost sounds like you're saying, hey, put all your your money in this one trade. And it's definitely not it, because I don't think that's like the right approach. I think we, you know, Josh and Ashok and I were at a trade show maybe in New York, and one gentleman had mentioned that to me. He said, well, look, if your trades work so well as you say they do, then, you know, you should be a multimillionaire, and why are you sitting here trying to sell me this product, right? And I think a lot of people say that, and you're like, well, in theory, you saying that's great, right? I should be. But, you know, if you give me $1 million, I'm not putting the million in all this in just this one trade. You know, I'm putting the million across a couple different trades, and some are going to work and some are not going to work. But if you give me $1 million and you want me to put it all on this EXAS trade or all on the ABC trade, yeah, let's do it. Let's go for it if that's how you want to trade it. But that's not the smart way to trade it. In my mind, right? I don't think that's the smart way to trade it, is just go all in and just say, let's see what happens. So
I agree. That's like,
feel
that's like going to casino and putting everything on red, you know, it's like, you know,
right.
you're better off, you know, just doing a bunch of iterations over and over, just playing the probabilities, you know, so that the probabilities, if they're in your favor and you limit your losses, that's how you make money over time, you know.
That's right. Exactly right. And like the casino, I mean, if you know you're leaving the next day, you know, win or lose, and you want to do it, then by all means do it. You know, you're not going to have time to sustain it. You're going to either make it or you're gone. But here, I know we want to sustain it. We want to make that consistent profit or that consistent income, you know, over the long term, and spreading it out, but spreading it out in areas that you are pretty confident in. And I think if you're hesitant, you know, I think that's a reason for you to take maybe an extra look and say, all right, you know, do I want to do this or not? You know, and two, holding out and, you know, maybe putting the trade on some other time during the day. If that's helping you, then great. You know, I think that's only a positive. So.
Okay, thank you.
Yeah, no worries, Dan. Anybody, anything else? Anyone, comments, questions? All right. Well, like I said, I think today's move in the market is going to be pretty good for a lot of these positions. Just here to mention the Hilton trade, and even this Six Flags, and I think Boyd Gaming, a couple of the other ones I think that were, you know, down a little bit of money on. I think they're coming back a little bit today with the market making this move. You know, the Boyd Gaming, I just pulled that one up. It's up to 63.25. You know, so you can see we're up 3% on the day for this particular position. So this one's down 75. So I think some of these positions will you know, start making a move back. We can always look. The good thing about the virtual portfolio is you can always look at, you know, what state is the stock in or is the position in at this, you know, point in time. So we can see a bunch of 8s here. You know, 1, 2, 3, 4, 5, 6 of the 11 trades are in state 8. So, you know, you can make further analysis by that. And I was totally looking at the date on another screen, but we can see here our next earnings dates are posted right here. So I totally missed that field. But, you know, so if you want to know you're in a trade and you have to get out before the earnings, you know that this is the trade you need to be looking out for to get out of the trade. So I didn't see that there, so that's my fault. But that is there for you guys as well. So yeah, that's all I had, Josh. If no other comments or questions, I appreciate you guys, you know, listening to me. And again, please use this virtual portfolio to track these trades. It's a really interesting tool, not only to see the trade, where you got into the trade at, where the stock price is, you know, is the stock price below my lower strike price? Am I past my break-even levels where I'm at in relationship to where I need to make money? So it's a great learning tool that we can use. So again, glad to be back, and I appreciate you guys listening to me. That's it, Josh.
Okay, thanks, Shawn. Great update on earnings. I know they just kicked off, you know, the banks, JP Morgan. I think Delta was last night or this morning. So
Yep.
yeah, hopefully keep those coming. I think it's interesting to track them as they come out. You know, we'll close it up here. I just want to, you know, thank everyone. You know, we've had some issues, you know, with this new server transition. So, you know, thank you for your patience. You know, if you find problems, just please email us. You know, we're trying to make this. You know, there's just going to be some bumps with the new servers. It's a different type of server, so appreciate the patience there for everyone. And you know, the other thing, you know, we're working on in the background here, we have a whole design team basically, and some coders working to make the platform a lot more appealing to the eye and easier to use. So you know, that's coming. You know, that project's starting to wrap up. So I'm not going to give a date when that'll be pushed out to you guys, but you know, hopefully in the next month or so. You know, I guess that's the date, but don't hold me to that. So, but you know, we still have testing and things like that to do on it. So, yeah, I think everyone will be, you guys will like it a lot. So it'll be a lot easier. We took a lot of the improvements and ideas that you guys sent and incorporated those into the platform. So, you know, appreciate the feedback, and you know, we'll see you next week. So thank you all.
Thank
Thank
you.
you.
Yeah,
Thank
Good meeting.
thanks everybody.
you.
Appreciate it.
Yeah, thank you.
Thank you.